Call to order. We're not going to have a spotlight guest tonight, and we have a. I'm so pleased to be able to announce that we're having the San Francisco Public Bank be our speaker, Misha Steier. Am I pronouncing that correctly?
Steier.
Steier. And I can't wait to hear about the public bank and all the new things about it. Please begin your presentation.
What a great setup. And just thank you so much for inviting me today, for making this space, and for all of your activism. It's really it's an honor and a pleasure to get to join you today. I prepared a little slideshow. Got it full screen. Let me know if you can't see it. And
I see it. Nice.
I would do maybe 10 to 15 minutes on this, and then 10 to 15, and then 15, 20 on discussion and Q&A. If that sounds good.
Yes.
I'll just launch into it. So always good to start. What is a public bank? I forget sometimes. So a public bank is exactly what it sounds like. It's simply a financial institution owned and controlled by the government. In this case, it would be the city of San Francisco. So what distinguishes it from private banks and for-profit banks is the prioritizing of public good and fiscal sustainability, as opposed to just maximizing shareholder profits, as is the job of private banks. It's not a new idea. It's not as radical as it's treated in America. 25% of the world's assets are held in some kind of public bank. In America, we just have the Public Bank of North Dakota, which has been in operation for over 100 years. And shout out to the Territorial Bank of American Samoa. They've joined the ranks of existing public banks in the last decade, but they are in short supply in America. And again, just to emphasize this dual mandate. So a public bank still generates some profits, keeps the light on, but those profits are reinvested into low-cost credit for socially necessary products. So again, it's the idea is to provide that credit which is necessary, but rather than those profits going into the pockets of shareholders, they're reinvested in the community. Just a sort of timeline about how we got here. So I think for a lot of people in this movement, I think they're kind of two, let's say, general inflection points. I think a lot of the genesis of this comes from the response to the 2008 financial crisis, right? Seeing the failures of the banking system and wanting to build an alternative, as well as just, I would say, just thinking about people come to this work because they're concerned about what is not financed or funded in, in this atmosphere of austerity. And then conversely, a lot of people in our movement come from trying to defund fossil fuels. So we have a big, the No Dakota Access Pipeline movement was a major point in our history. And a lot of the people most involved in our movement, we're trying to get their local municipalities to defund from the banks that fund these fossil fuel projects. And they were told that that is not an option. So that's how they came to public banking, to build that alternative, so that our public funds would not be contributing to financing things that are not in alignment with our values. So in 2017, the coalition was formed. In 2019, us and a couple sister coalitions went to Sacramento and passed AB 857, which was the state legislation allowing us to create public banks. Following that major victory, the San Francisco created the Reinvestment Working Group to produce the business plans, governance plans, and viability study for the public bank. And that Reinvestment Working Group was seated in 2022. They went through a long community process to create these plans, and those plans were completed and accepted by the Board of Supervisors unanimously in 2023. So that's how we got here. Next step, what I'm sure we're all most interested in, what I always want to know, is what's going on with the public bank. So as you can see, it's taken us a minute to get here. We're always a sort of a long-term project in that way, but we keep plodding ahead. We've made steady progress. So the next step is to create, according to these business plans and governance plans, is to create phase one, what we're calling a green bank. It's also referred to as a municipal finance corporation. This is simply just a city-owned lending fund. So this is not a bank in the same way that banks, make loans off deposits. This would just lend the money out it has available on a one-to-one ratio. And the idea here is it's twofold. So it's one, create this green bank in order to make the best case to the regulators to get a bank charter. So the idea here is create some kind of financial institution operated by the city of San Francisco that can demonstrate a track record um, of success and professionalism when we apply to that bank charter. And secondarily, it will allow us to immediately be eligible for federal funds through the Inflation Reduction Act's Greenhouse Gas Reduction Fund. So this is the most likely way to be successful, and this also allows us to start operating sooner than if we were to start with just the full-blown bank itself in that application. And so what we've been stuck on, and what I was excited to share with folks in is that the hurdle we'd been presented with, that we've been stuck on in light of the city's current fiscal situation, was the city attorney's office. So they didn't have the budget or the expertise for forming this financial institution. It's not something the city has done before, and that wasn't budgeted. So we've been spending this time trying to overcome that. And in the last month, we have made a ton of progress on that front, including with meeting with the city attorney and finding pro bono counsel and making those arrangements. So we've overcome that hurdle. We still don't have a full sense of what the timeline will be from this moment of getting this pro bono attorney to the legislation being introduced. We do have, obviously, we know how long it takes from legislation being introduced to a vote, but I still can't fully say what the timeline is for when we would expect a piece of legislation to be introduced. I would say most ambitiously, this fall is still on the table. We could see some legislation being introduced in October. If everything breaks right, if tomorrow the documents start being signed. I would say more realistically, we anticipate likely winter or fall. So this would be, a vote to establish the bank, this phase one green bank in the start of next year. And the idea here again is to try to stand it up as early as possible to take advantage of this federal funding opportunity in the Greenhouse Gas Reduction Fund. So next slide, just some broad stuff about why public banks are fantastic. So the priorities are determined by us publicly. So this current proposal is affordable housing focused. It's like 3 buckets: affordable housing, the green transition, and small business. The beautiful thing about a public bank, though, is these priorities will be democratically determined, and all of this will be determined by you and us, and not just the current proposal, but what it finances will be determined by us. Again, it's a public alternative to Wall Street banks, so it's a way to challenge that monopoly power, as well as putting our money where our values are. So prohibitions on supporting fossil fuels, weapons manufacturing, tobacco, labor law violations, and whatever else we determine is a social ill. And as well, it's really important, I think, this vision keeps money circulating in the local economy. So that money that gets paid for interest, stays in San Francisco and enriches San Francisco instead of going straight to Wall Street. And again, it's about community reinvestment. So it's not just about building that local economy, but it also is just really efficient opportunity for the city. So we save on costs. Again, if you think about, if you compare it to, say, bond financing as another model for public financing, in that case, it's higher interest and it's paid out to private actors, whereas in this case, the interest in this lending would be, paid to the city, just to give you an example. So it really allows limited municipal dollars to go further. And again, the democratic accountability and transparency provides just another layer of oversight, combats corruption, and the fact that it's public makes it much more accountable to the public. So that is the broad overview, kind of specifically just doubling down on what's exciting about the SF Public Bank proposal. So just a reliable source of low-cost loans that really dynamically meets the specific needs of the community. We keep talking to people in, affordable housing preservation, small business owners, and it's so clear what's necessary is this kind of flexible bridge capital for people. People know how, you know, their business, or they know how these things work, and they you know, just need some help, you know, facilitating their activities. So thinking about things like affordable housing preservation and first-time home ownership programs, protecting and supporting our vulnerable small businesses, which are at high risk of displacement, especially in our commercial corridors. Things like infrastructure, electrification, upgrades, and maintenance, um, and as well as just financing, you know, public works. So making not just, you know, lending to affordable housing and small business, but also ultimately this is the lending facility the city could tap, um, and that's kind of our North Star, and that is very powerful. Again, keeping that money circulating in the local economy. And I think it's important to uplift, like I said, cost savings everywhere. So not just for the small businesses, not just for the affordable housing providers and small businesses. Uh, the city itself saves money, and we save money on our electric bills, um, on public transit, on all of these things. So the benefits are manifold. And finally, a big reason people are excited about it is it's fiscally responsible in the way that it smooths out the budget cycle's volatility. So this is something I know city workers are extra excited about, but this is just, you know, a really I just keep thinking, this is one of my mantras. The best time to start a public bank was 20 years ago. Second best time is now. And this is just, if we had a public bank now, this current budget cycle may not be working out this way. So just thinking, you know, about the ways that it allows the city to be more flexible in its financial planning. So all of that is the pitch, and then I'm just going to get to some specifics about it, about the San Francisco plan that I feel like you'd like to know, and then we can get to the discussion. So I just wanted to set this up by introducing the reinvestment working group. These are the individuals who are on it. So, you know, some community voices I hope you might recognize, folks like Kristen Evans and Fernando Marti were instrumental in designing this, as well as I wanted to highlight folks like Jennifer Finger and Rafael Morales, who are from Self-Help Credit Union and Beneficial Bank. So this was a plan put together by people with a lot of expertise and authority in the field, as well as the city hired a consultant who had Gary Finley, who had a lot of experience standing up CDFIs and credit unions and community banks. So this is a plan that is highly informed by the experts, is what I wanted to get across, as well as these are all of the people who were consulted during the formation of the plan. So I won't linger on this list. I just wanted to give you a sense of kind of the broad and genuine voices that were consulted. This isn't the full list, but just to give you a sense of like of what informed it. And so now onto the plan. And then just one thing to keep in mind about this plan is this is the business plan. It is a strong suggestion. It is not binding. So the actual decision making will come through the legislative process, and again, subsequently through bank operations. This, you know, these details are subject to public influence in a positive way. So anything you want to see changed, it is not too late to change. So I wanted to just move quickly to the governance structure. Don't get too bogged down into this. I just wanted to highlight a few things about it. So one, you'll see this kind of two-tiered governance structure. So the elected officials, the voters of San Francisco, we pick our elected officials. They will pick an oversight committee. And this oversight committee will then select the members of the board. And that board then has the hiring authority. So this is done in order to create both independence and oversight and accountability. And I think a key thing I want to uplift here is that this governance structure is, I think I can move to the next slide actually. I just want you to recognize that, you know, there's this two-tier system, and that it's got this division, you know, that doesn't just concentrate it in mayoral hands. It's got this, you know, the board of supervisors and other elected officials appointing authority. But what's important to keep in mind is that this governance structure that is from the business and governance plan that we support will require a ballot measure. Under the current city charter, any new commissions or authorities like the public bank would default be subject to would be mayoral appointees with board approval. So it's very important to us that the public bank not be set up with that kind of mayoral authority. Not only for obvious political reasons as well, federal regulators are not likely to look well on that. So for the bank itself, it's very important that that be the case. That and for the MFC and Green Bank, the current position of the coalition is that we would prefer that recommended governance model as well. But we're aware that kind of given the tension with needing to stand the bank up as soon as possible to qualify for these financial funds, as well as the relative lack of frankly, like damage that could be done through a green bank seated that way compared to the public bank is less concerning. We have determined, it might be we're comfortable if this is the way the supervisors go, that if they want to set up the green bank and have it be mayoral appointees, that's fine, so long as it's understood the public bank will not be set up that way. So that's just the governance, which is very, very important. And then final bit is the money and looking at the city's kind of budget situation and thinking that through. So just a quick kind of use of terms in the business plan. So they distinguish between capitalization and funding. And I'll show you in the next slide, but essentially the difference is capitalization is, I would say, 100% like a grant. Like that's money that goes into the bank. It's not anticipated that will be repaid immediately. That money is still owned by San Francisco when it goes to capitalizing that bank. But that is like, I would say, this is what the startup cost is. The funding comes in the form of ideally deposits. That is the model that banking typically uses. It can also be things like any form of like debt, zero cost credit would also suffice. So you'll see in this next slide, they distinguish between funding and capital. And what I just wanted to highlight here is this number in capital is going to be the startup number that will be a direct contribution that will not be paid back. And then this funding here, it comes in the form of loans. So that this is the number we need to meet out in the wild, so to speak. This part will be taken care of. Once you have this capital, getting this funding for it becomes much easier. So we can return to this if you want, but again, I just wanted to highlight that our target is $40 million in 3 years, and then that gets us to a place where we have a public bank that one is making $250 million in low-cost loans, 1 to 2% below whatever rate is publicly available otherwise, and two, it's important to note that the bank becomes self-sustaining in year 3 and generates revenue going forward. You'll see in this net income place. So that is something that, in effect is revenue returned to the city. Ideally that stays in the bank and gets reinvested, but that is sort of the return. And finally, here's the plan for capitalizing the bank. So how do we get to that 40 million? Again, we're laser focused on this greenhouse gas reduction fund, particularly given the city's budget situation. That gets us to 20 million. The plan calls for 40 million over 3 years. So given obviously the next year is not likely to be any better, we're going to prioritize looking further for federal, state, and then philanthropic funding could also fill that gap, especially say year 2 if the city's budget outlook's a little better in year 3. And then finally, if none of this pans out, not to fear, there's still progress being made. Plan B is very solid, if not as exciting. But the Greenhouse Gas Reduction Fund includes technical assistance for Green Bank. So at the very least, be able to get some money for staff to, build that staff capacity, and that they, when the city's budget outlook is sunnier, we can put money in the thing. And that's it. So sorry to go for a little bit over, but that was my spiel, and happy to answer questions, get thoughts, and yeah.
All right, that was a great presentation. Let me say, Lee, I'd like to have you ask the first question, please.
Okay, and my background is I used to be an economics professor, and I'm now a emeritus management professor. And so, some of these are at least somewhat familiar to me, though finance was not my particular area. And so what I'm trying to think about is, how is this the same or different than other kinds of vehicles that already exist for funding things? Obviously, one of them is the private banking system, and I think you've somewhat explained that there are somewhat different motivations for this. A bigger question for me is, how does it differ from other government funding? The Philadelphia, or not Philadelphia, I used to live there, San Francisco gets money in taxes and in loans and then lends it out in various ways and runs projects. And the question is this more honest, more efficient than the private system? And San Francisco, like many other governments, has a long history of corruption. The corruption has been quite successful in the past. It gets thrown out every now and then, and so do banks, of course. And so it's clear to me that the intentions seem worthwhile in the general direction, but it's not clear to me that this is, and you're sort of cutting out the middleman, the profits made by banks, and so that gets made by the city, assuming, however, that the city can run an enterprise successfully. And as you know, governments don't always do that. And I have suffered through some of the public works projects in San Francisco, for example. So anyhow, that's just my framing of trying to understand what this is.
Yeah, I mean, I agree with everything you brought up in that. I think those are all really insightful concerns. I would say a few things. I think you zeroed in on the real value add is that profit going to the public. It's that and that difference from what is available on the private market. So I think that is the actual fund.
Well, and the government market of doing things that the government gets money by borrowing.
Yeah.
And then uses it for projects.
Yeah. Exactly. Like, for example, it's cheap. It's not. You're more sophisticated than me on this, and maybe not the greatest way to think about it, but cheaper than bonds, or like thinking about it relative to bond financing, It seems very attractive. In addition, of course, I would say you're right that there is, I think, in the private market, there's still CDFIs, there's community banks, there's credit unions, there's a lot of this kind of is available. I think the issue is, one is like, there's still a lot of unmet demand, and two, I think that there is a big role for the public to play in facilitating that kind of relationship as well. So the public bank doesn't seek to replace the CDFI universe. It really seeks to kind of partner with it in a general effort to bring credit costs down.
Thank you, Lee. Mari, would you ask the next question? Thank you.
Yeah, my first question is, for some reason, I did not see the presentation on my screen. Did everyone else, I hope, see it?
Yes.
Oh, good. I hope it got recorded. If it didn't, we'll have to get another copy. I don't know where it went. Anyway, my question is really, I guess I asked you a couple of questions and you answered one of them. You said 40 million over 3 years. Is that what I heard you to say?
Yeah.
That's what it would cost the city. So I'm wondering what kind of savings. I mean, we pay banks huge fees to manage our money. Right now, the city does. So if we were managing it ourselves and not paying these fees, where would that saving somehow cover some of these costs?
Yeah, that's a great question. So a few answers I have to that. So one, the revenue generated by the bank, over a long enough time frame, like if we go back to my slide, I won't bring it up, but that, eventually that will generate revenues that will cover the capitalization cost in that sense. Secondarily, we are currently working on trying to answer this question about savings in an accurate manner. So this is not something that I want to like just throw a number out on. It's an important thing that we're like, we have a subcommittee, we're working on a report, we're really trying to get to the bottom of this answer. So I wish I had a more accurate answer for you. There will be tremendous savings from that difference in interest rates for the and from not paying those fees. But I don't want to be inaccurate about that. And then finally, you asked a really, I think, sophisticated question. I just wanted to kind of directly answer to. You asked about like, and you asked in effect, like, when would San Francisco see the return on the public bank? So I think, again, a couple answers to that. One, like I said, the difference in the interest revenue it generates, that's one. Two, again, we're trying to study this, but there's a lot of second order impacts, right? In terms of job creation, in terms of building the city's tax base, in terms of cheaper costs for the public, cheaper energy bills. And then finally, I don't like to say this, but it's true, and it should, you know, put everyone at ease who's not like 100% their whole life is about public bank like me, but like the city can at any point as a shareholder like would be able to, if it wanted to shut the bank down, it would be able to get its capital back. So that is always like, that is something that the bank has to plan to be able to do. But that money that goes in as capitalization, I like to think of it as going into the bank and staying there. It does not in fact have to. It would simply just require shutting down the bank, which I personally would think is a catastrophe, but that is always like an option for the city in terms of liquidity. So that capital is committed. It's an issue in terms of like liquidity when it would come back out, and some of it would be sent on staff, but for the most part, it's not like the money that goes into the bank is locked in there forever. It is accessible back, if the city wanted to shut the bank down.
All right. Thank you for that.
Okay, I gotta tell you, I'm really good at asking questions nobody knows the answer to.
One more question, Mari.
That was all I had to say.
Oh, okay, great. I wanted to ask that question, the follow-up question again about the bridge fares and that staggering amount of money. As you know, I think the bridge fare went up to, I think it's close to about $10 a ride going across the bridge. This is a fantastic amount of money that could be brought in with the bridge fares. And presently, all that money is being put into regular banks that invest in bombs and and tobacco and all of these other things that we don't care for. Now, I can understand in a certain sense that you would want to have that amount of money separate from the money that you're going to be making, that is going to show that the public bank can be successful on its own. But as soon as possible, it would seem to me that money from the bridge tolls needs to get divorced from the regular bank system and into the public bank as soon as possible, please.
It's a beautiful vision, and absolutely, and I think in general that is like this business plan that's presented is keyed for the most feasible, most reasonable, regulatory approach. Like that, there is frankly just, to me, relatively endless scalability when it comes to what, how the deposit base could be leveraged by a public bank. So absolutely, bridge tolls should go in there, but really the more, that of the deposits that the city wants to keep in the public bank, the more lending it can do, the more impact it can have.
Exactly. Yeah. I don't see any more hands being raised. Maybe I would ask Lee Robbins, since he's our go-to economic guy, if you might have another question after listening to the ones that you've already heard.
No, I think I would just make the comment that I think it's basically a good idea, essentially for public relations reason. Public relations isn't quite the right word; it understates it. But for a shared community interest and feeling in doing the projects, and other than that, it's like the much bigger questions of should things be state run or should they be privately run? And there's, many pros and cons about that. And given the difficulties of human nature.
Yeah.
Very wise comment. Yeah, and absolutely, I think you see what.
Mari has another question. I thought it was a very good one.
Yeah.
Mari?
So
Okay, somebody has a question in the chat. So I'm just gonna read that. Then I had another one. Would accounts be FDI insured the first year?
So that's a great question. So not in the green bank. They would need to be insured in the public bank. I'm going to complicate this question a little bit. I should have said this earlier because I think this is it's very intuitive that it should be this way, but it's not because of the state legislation. The public bank will not have checking or savings accounts. Like we won't be able to open up a checkings or savings account there. That is a prohibition that was put in there in order to get it passed. They didn't want us competing with that service being provided by private banks, including community banks. So the public bank can still, partner with credit unions to provide those services. But in terms of deposit insurance, it's not like individuals will have deposits that deposit insurance only goes up to $250,000. So that deposit insurance covering that is not as much of a concern. The deposit base for the public bank is going to be really large deposits, is the vision. And so we're still required, though, again, from the legislation to get FDIC insurance. So, to give you peace of mind, it's there. But my point, I guess, is to say we're required to get deposit insurance by the legislation. Insuring deposits could be done, say, through the, private market. That's a service that's offered. This is requiring FDIC approval was, politically something that was put in there in part as a hurdle, in part to secure, to make people feel safe, but really it was, done there. So we are set up very much for getting FDIC approval, and it's a big hurdle, but it's something that is, between all of us is not like as it's not a thing that was put in the law because it was the most effective way to protect the deposit base,
Okay, my other question is a bit wonky, but it has to do with the fact that people, the way the tax structure, or I don't know, something's set up, it's very complicated and difficult to get money to maintain capital improvements once they're built, right? So what we have now is a lot of our capital improvements that we've invested in are basically falling apart because they're not being properly maintained. So if one were to be able to do it somehow legally, would it be possible for our own city bank to take on some of those non-capital improvements as capital investments in what we already own to keep them from falling apart? Oh, do you have any idea about that?
I mean,
Like
no,
operating costs, whatever.
well, because you're asking such a specific question, I want to make sure I understand it. So I'm going to just say I don't know, and I should follow up with you because I just want to make sure I know what you mean when you say non-capital improvements and the like. But that sounds, I don't know. I guess that's the best answer is I should follow up with you.
Okay, we can talk about that later. I'm just curious because we have these $1 million things that we invest in, but we're not allowed to consider that capital improvements or capital investment. But you would think that keeping something that you've invested in running, at would be part of your investing in what you already own, should be part of the capital improvements. But we don't have to go into that today. Thank you.
All right. Good question, though, Mari. And thank you so much for the presentation on the public bank. Really appreciated it.
Of course, this was a wonderful crowd and really an honor to have such brilliant questions thrown my way. And if I may, I'd just like to add my link to the mailing list
Oh, yes,
If
please.
you want to sign up, we also, not stealing your base, but we have our own monthly general meeting. Folks are encouraged to join as well. I'll put the registration for that. All are welcome. And yeah, just happy to continue this conversation. I'll throw my email in the chat as well, but please, you are full of brilliant suggestions and insights. So like what you were suggesting today, I want to keep this pipeline of good ideas going. And just yeah, thank you for your time in this space.
There's one other question in the chat. Can you issue bonds?
I don't think so. Can we issue bonds from the public bank? I don't. On the revenue on the loans, I don't. It's not an idea.
Ask.
So, you know, the bonds are supposed to be sold,
Yeah.
you know, and yeah, I think, and that has to have public approval, right?
Well, it's a matter of whether or not, we don't have to go into it. It's another wonky question, but I think the person who's asking it probably is, you know, on a different plane from, some people are more familiar with financial vehicles than others, so.
Yes, okay.
Okay, thank you.
Thank you.
All right. I have another meeting I have to get to, so I won't be able
Sure.
to stick.
All
around, but
right,
thank you.
yes, thank you for being here.
Thank
Appreciate
you
it.
so much. Appreciate you all.
Bye now.